So this video is going to just be me talking about market perspective and some of the things I've learned during my time in the market and backtesting XPX 500. So we can just talk, have a chat. You can send me comments on the comment section if you have any questions to ask and stuff like that. So yeah, let's get on with it. So I'll be backtesting SPX 500. Let's do October 2024, because on the 5 minutes there's not much data if you go all the way back. So let's just do October, maybe first 10-15 days, while showing you my trading strategy and the ideas and the reasons why I took the trade, and just discussing generally. So we're in February as at the time I'm shooting this video, and the market has been a bit rash because I think the inauguration of Trump and all the new policies is making is affecting the confidence with investors in the market. So most swing trades are not really making major moves, and if you even notice on SPX 500 and NAS 100, which are the major indices, are not really moving at the moment. They're even shorting. As I currently, we have got major shorts on those pairs because there's not much confidence in the perspective of investors with the new president. When I mean not much confidence, I mean the economy is not stable enough for investors to churn money into the USD. But hopefully February should be the most it happens, because February price action has just been really shitty. So with that being said, I took a lot of losses this month because, like I said, the price action wasn't so good. But when I mean take losses are part of the game. These are just money you spend to do the business, and when you take profits, part of profits when you do a business, and when you take losses, a part of the losses you take when you do businesses. So that's just it. So with that being said, it's been a very average month. January was quite decent as the year is just starting. So let's see how March and the rest of the year plays out. But basically, I have a good feeling about the USD, and hopefully it's going to provide much liquidity this year and the next 4 years to come. So yeah, so I'm looking at this particular trade on XPX 500, and I'm looking to go long on it. This is after New York session. Most of the time, most of my trades are around London session, but well, this is the back testing, and we don't know. We just have to test, because this is one of the things that make you confident with your edge, when you test and test and test and test and test. So the previous data doesn't affect future price action, but it just gives you an idea of what your trading methodology presents and how you can swindle and handle it. Well, so I'm looking to go long. Why I'm setting a buy stop here is because sometimes price could just, after creating this double bottom pattern, it could just go short like this and goes to stop loss. So I'm looking for price to take me in when it's going, and if it does stop me out after that, it's part of the business, it's part of trading. So yeah, let's see how this trade plays out. So we can see our ideas is still supported. I'm looking to break even at a 1-to-1. I think a 1-to-1 is right around this horizontal ray here. So let's see. Still in the trade. Price is making downtrends in our trade, but that doesn't affect the original trade idea. So once you take a trade, you do not get out of the trade except it stops you. When you take a trade, accept the risk of the trade and let your trade play out. So let's see. Just keep going. I'm going to be taking just 5 trades here in this session. So my price is making downtrends in our trade, which is very, very weird. I think the reason for this is the late entry, because once London session is New York session is done, the liquidity is not so much to I rarely activate trades or execute trades after New York session because the liquidity is not so good. So let's increase the speed. So it either stops us out. Yes, we have been stopped out officially in this market. But aside the fact that it has stopped us out, we've missed out on a trade opportunity here. Because if you see this, if I wasn't in this trade, let's say I stopped myself out of this trade early, you can see how price did this. You can see how price created, we are in a downtrend now, creating this pattern here, double triple top formation, and we went short. So I'm going to ignore this trade because I wasn't there and I was still holding the trade. So but generally, if you did take this trade, you can sell shorts after the close of this candle. You can put your entry right here, put your stop loss above this level, and let price do its thing. So but this trade, I am not in this trade because this is not, I was already in a trade here. So I don't deceive myself when I backtest. So I've taken a loss here. So out of the 5 trades we plan on taking that we missed, this was a missed opportunity. This is a missed opportunity which eventually stopped us out, but it's a missed opportunity. So we are looking to take 5 trades here, and we have 1 stop loss already. So let's do this. Backtest goal, 5 trades on XPX 500. Then 1 loss now. So we'll wait for the next trade. So this is 12 o'clock. London, New York overlap. New York, London overlap. So I'm looking for an opportunity now. So this looks interesting. Why does this look interesting to me? Because first off, we have this. We have a level here, and price breached it, but it wasn't a very, very concrete level. This is just very, very shallow. But we have this. This is like a major demand zone on the 5 minutes time frame. Remember, decisions on this time frame are just within 5 minutes, so you take it with a grain of salt. It's not compared to the 4-hour time frame. So I'm looking for entry opportunity to go long if it presents itself. So we're waiting for patterns, waiting for momentum, and boom, you can see what happened. So I'm going to be looking to, this is it New York yet? No. Yeah, it's almost New York. So I'm going to be looking to buy above the level. I do not buy market recognition on the 5 minutes time frame because it is very, very tricky. So I know you can say the stop loss is very big, but the goal is to look for 1 to 2. Just double your risk with profits, and you should be fine. So let's see if it plays out. So you can see that if we go back, you can see that price, you can see that immediately, this is what I was saying. You can see how price just went down straight without triggering us, went down to stop loss straight, then decided to start coming up. So with that being said, this trade wasn't valid. So we had another opportunity here. So let's wait for and see how this particular one plays out. So we have this, and you can see we have a 1-to-1. Price came, stop us out. So on this particular, we have next trade 2, break even. Now we move on to the 3rd trade, and the 3rd trade has to play on the next day, because as at this time I'm closed for the day. So we wait till the next day and see how price happens. So I'm forward playing everything till we get to my time frame the next day. So this is how you backtest. So remember, like I said, this video we're just going to be chatting, and whilst I backtest and I explain to you what I see before I execute. So now this is 5:40 the next day morning, which is on the Friday. So we are looking to trade our pattern. Yep. So now let's find a trade. So this is 6 a.m. I start trading at 6 a.m. So this is 6 a.m. I'm live in the market. So I'm looking for positions. So from here, we can see that price created a high, and we have a double top here, like a resistance level here. Price sold off that resistance, created and started creating lows. So what I'm looking for here now, I'm looking for opportunities to continue to sell shorts. So let's see if price gives us the opportunity. So now price just keeps shorting and I'm not in the market. So nothing yet. Now this pattern has been invalidated. So if we move on, if we check this, we can see once price created this, it came short, now invalidated all of this high, creating new low in this level. So with this in place, I'm looking to start finding long position. But see, that has also been altered. See, this is the reason why the 5 minutes time frame, you have to treat it with a different concept, because it is very feeble and decisions are just made within 5 minutes, so a lot of things can happen. So now I'm still looking to see what the market has. Okay, with this in place, I'm looking to go short. I'm looking for short position. So why am I looking for short position? I'll explain. So we took out these highs in this level, took out this high, but we had a big push of price to the low on this level, and now we have our pattern clearly here. So we have this, 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 and this. This is your double top formation. Let me clear the chart. So this is your double top formation right here. So I draw my rectangle on top of the level because it's an area, and I'm looking for a short position. Now with this being very clean, I'm still not looking to just sell right here because it's the 5 minutes time frame. Like I said, a lot of things can happen. So I'm going to sell, and I need price to wick me in at this level. So my stop loss is right above this particular high, right above this wick. So I'm looking to take positions 1 to 2.33 in this area. Price decide to deliver. So let's see. That is under stop loss. So that's how many trade triggered? 3 trade triggered, 2 break even, 1 break even, 2 losses. Okay, keep going. We have 2 more trades to go. So with this playing, I have 1 more trade on the day. Now we have a new level here that I'm interested. We have a point of interest here. We have the same pattern. Remember, we're not doing more than just the pattern. We have a high, low, another high, creating another low here, and I'm looking to go long on this area. So as price closed here, I'm looking to buy above the level. Stop loss right below, and let's see what happens. So, and that's, my friend, is a 1 to 3, whatever you call it. I think we have a clear 1 to 3 here. Yes, so a 1 to 3. So this trade now, it covers for this and covers for this loss here. So at the moment, we are now 1% up on the trade. This is what trading really is. Not all the things you see online. This is what trading really is. So we have trade 3, loss, trade 4, win. So we have 1 trade to go, and now I'm closed for the day on this particular day. So we wait till Monday. This is a Friday, so we'll wait till Monday. So this is the waiting game, because I just take 2 trades in a day, the same pattern, 2 trades in a day. Make sure it is in the time frame you trade. You can also trade this in the Sydney session, but make sure it is a time frame you trade. Okay, now we pause. This is 6 a.m. my time, and the pattern is here already. So now look at the situation we have. We have a double top formation here. Now we have price come short, created a high. We have sellers ready to short here. Now we create new lows lower than this previous low here. Now we have this situation. So here we have this price here. We have a double top formation here, which I am interested in this particular entry. So looking at 628.5 here, I sell below here. Let's see what the delivery looks like. And my friends, this is it. You can see price did not stop us out. You see how we have enough cushion, and this is what we have here. We have a 1 to 4 on this particular position. But most of the time I just take a 1 to 3, and just because I put, let's say I'm staking 100, let's say $1,000, I've gotten $3,000. Like, what am I really looking for in the market? I don't like to stretch the market too much. So we took 5 trades, 2 winners, 1 break even, 2 losers, and that is all for this session with the backtesting. So you see, the patterns present themselves every day. The goal is to go in, take the trade, and trade without fear. What do you mean by trading without fear? You understand that you do not know what is going to happen next. Once your pattern plays out, you take the trade and let the result play out. So with this backtesting, you can see the result of this backtesting. We have first trade was a loss. I have the first trade a loser. Second, 1 second please. We have the first trade a loser. Second trade break even. Third trade a loser. Fourth trade a win, and the fifth trade a win. So with this, if we do the maths properly, let's say for every trade we're risking 1%. So 1% on the 2 losses, that's 2 times 1, which equates to 2R. So we lost 2R on the losers, and for the winners, which is a 1 to 3, we have 3 times 2, which equates to 6. We have 6R on the winners. So if you do the maths properly, 6 minus 2 will give us how much? That's 4% in how many trading days? This is Wednesday to Monday. That's Thursday, Friday, Monday. So in 3 trading days, you're able to average 4% on this using this particular strategy. So dear my friends, is how you go about trading my strategy. And don't forget to like, comment, share, and subscribe to this channel. I will be here to always give you value. Remember to always think in process. Be very, very process oriented. Do the process and let the result unfold as the time keeps going. I'll see you guys in the next video. Bye for now.